Hello traders, let me give you the simplest model that you will ever need to be profitable. I have taught you guys about structure, and if you have not seen my structure video, you can find it on my page. You can find it on my Instagram page and on my TikTok page. And even you can find it on my YouTube page, extensively taught there. But however, what we're doing today is different. I want to show you today that with just structure, you can analyze the market perfectly. We will not be talking about anything called liquidity. We will not be talking about anything. Therefore, what we'll be treating today is what we call structural analysis. All right. So without further ado, let's get into the screen. Though there will be part one of this, which will just be the schematic, me explaining what it is about. And part two will be practical examples for better understanding of the concept. So if you really want me to release the part two early, ensure that you share this, save it, and ensure that you watch and understand this. Without further ado, let's get into it, okay? So for the schematic part of what structural analysis is, structural analysis. All right, for the schematic part of what structural analysis is, there are some key things to note. The first thing to note is that two time frames establish order flow. Okay, two time frames establish order flow. That is the first key thing that you want to note. Okay, the second thing you want to note is that a break of a low or high, a break of a low or high is what defines the trend on a particular time frame. All right, two things. Firstly, two time frames establish order flow. The second thing, a break of a low or high is what defines the trend on a particular time frame. All right, so that is the two things that you need to note in order to understand. Those are the two things you need to note in order to understand structural analysis perfectly. Remember, we will not be talking about liquidity, nothing like inducement, pure structure in a simple way in line with time frame analysis. Okay, let's get into it. So the first thing is to have a schematic of how two time frames establish order flow. Now, what you want to do is that you want to have series of time frames, okay, in order to make this as objective as possible. You want to have series of time frame, okay, and I will always suggest up to 4 to 6 time frames. And why is that? Number one, it has to be even number of time frames. 6 is an even number. 4 is an even number. Because remember, our first rule says that two time frames establish what? An order flow. So it is very important that the number of time frames you will be using to work together has to be what? Has to be 6. And you want to make them objective. That is the same series of time frame that you set for yourself, all right, must be the same series of time frame that you always use. Even when you want to change them, ensure that you look into changing almost all of them so that you can have a definite approach as to why you want to tackle it. But I'll be using some major time frames, all right, that you are used to explain this, and I will create a pair between them. So what are the time frames I will be using here? I will be using 6 time frames, all right? You can decide to be using 4. but I'll be using 6 so that you can have more what? You can have better entry, all right? And also, you can have more conference to deal with, okay? So without further ado, let us get into it. Firstly, I'll be using the weekly time frame. I'll be starting from weekly time frame. Weekly by W. The next one will be daily. Okay, and the next one will be 8 hour or 4 hour time frame. There's a reason why I use 8 hour. 8 hour time frame is very important to me because 8 hour is the cycle of your session. For example, between London open to London close, we have 8 hours. Between New York open to New York close, we have 8 hours. Tokyo, 8 hours. Sydney, 8 hours. Frankfurt, 8 hours. All right. So that is why it is very important to me because it is a sessional time frame. Okay. Or you can use 4 hour. If maybe you do not have a premium trading view or whatnot, you can use 4 hour time frame. So we have 1, 2, 3. The next one we will look at is the 1 hour time frame. Now we have 1, 2, 3, 4. Now we have 4 time frames. Okay. So now we have 4 time frames. Okay. The last 2 that we will be using are therefore our entry time frame. So let us call these guys our what? Our bias time frames. Let's call them bias time frames. We'll call these guys our bias time frames, all right? So, but we will now also establish our entry time frame. So what are our entry time frames? Our entry time frames now. Our entry time frames will be 15 minutes time frames, TF, and 5 minutes. We will not go beyond this. 15 minutes time frame and 5 minutes time frame. Remember, I told you these time frames must align in terms of what? As a pair. They must align as a pair. It is very important that you align these time frames as a what? As a pair. And of course, if you guess right, you already know how I will pair these particular time frames. How will I pair it? I will use weekly and daily as a pair for the long-term bias time frame. Then I will use 4 hour or 8 hour and 1 hour. I will use 4 hour because 4 hour is very common. Okay. Among you guys, I know 4 hour is very common. So I will use 4 hour and 1 hour time frame as the second pair. And of course, 15 minutes and 5 minutes as our entry time frame pair. All right. Very important. Now, what do you want to check when you want to deal with this? What do you want to do here? What you want to do here is that you want to ensure that the time frames that you are using, you want to ensure that they align in terms of what? In terms of structure. You want to ensure that they align in terms of structure. Very important. What do I mean by that? And remember, I also mentioned something about the second factor that governs our structural analysis. I said a break of a low or a break of a high is already a trend, already establishes a trend. That is a break of structure of a low or a high. On the time frame you are looking at is the trend. It is not the higher high, higher low. No, it is that break, which means that let's start with weekly time frame now. Okay, I will need to erase this. All right. Or better, so let me make this bigger. All right, so let's have the full screen of the whole thing that we want to do so that we can have more screen to ourselves. So we are still talking about structural analysis. Do not forget that. So the first thing we want to do is let's now first deal with the weekly. and the daily. And whatever you do with weekly and daily is what you do with 4 hour and 1 hour, is what you do with 15 minutes and 5 minutes time frame. Okay, that is what you will do exactly with all of them. So for the weekly and daily, so let's say I'm on weekly time frame now, weekly, and this is our daily time frame. Weekly time frame, daily time frame. All right, so let's talk about our weekly and our daily time frame. Let's say on the weekly, this is what I have. So let's say I have high, low, higher, high, higher, low. I don't need to see too much. And then presently, I now see a low. And price is around here. Remember the second factor. It says once a low is broken, that is already a trend, a break of structure. So which means that on this weekly, I will not record bullishness. No. Remember, we are not talking about liquidity here. Forget your knowledge of liquidity that, oh, this could be inducement, this could not be inducement, and all those guessworks that you might have been doing. This is pure structural analysis. Nothing mixed. We are not seeing this as liquidity. Whatever low is broken on that time frame, any structural low that is broken, your last major higher low that is broken, if it is broken, then that is a break of structure on that time frame, which means you will record the weekly time frame as being bearish. So our weekly time frame is bearish. All right. And remember, each time frame that we pair against each other must align in terms of what? Structure. They must align in terms of structure. Very important. All right. So this is bearish. Daily time frame. Let's go to the daily time frame. For the daily time frame, let's say we see something like this. Okay. Price has been bearish and price does this. Now, look at the daily time frame. On the daily time frame, on the weekly time frame, price stop here. But that thing that stopped here on the daily time frame is a break of structure to the upside. In this case, the weekly time frame is not aligned with the daily time frame. It is not aligned. So what do I need to do? I need to wait for daily time frame. All right. I need to wait for it to align with the weekly time frame, which means I need a move like this. All right. I need a move like this to break below so that I will be able to record daily and weekly as the same bias, bearish and bearish. All right. But in this particular example, when we will be going to part 2 and I will be showing much more examples, live examples, we will be doing with the technical parts whereby they do not align. So let's just assume that they align, that the daily is also bearish and the price is already here. So daily now, we have it to be what? Bearish. Daily, therefore, we have it to be bearish. That is the case of weekly and daily. Okay. So what do we do? The next thing we want to do is to move to our next pair, which is 4 hour and 1 hour time frame. All right. So let's keep this somewhere. Okay. And now we want to have a table of 4 hour against 1 hour time frame. The table. All right. This is 4 hour and 1 hour time frame. So let's now say on 4 hour time frame. All right. So let's say on 4 hour time frame, what do we have? Let's say we have something like this. A bearish structure and then a break. So which means that 4 hour time frame will be recorded as bullish. 4 hour time frame will be recorded as bullish. And let's also assume that our 1 hour time frame is also bullish. 1 hour time frame is bullish as well. So 1 hour time frame just clear this eye. All right. 1 hour time frame just clear this eye as a break of structure. So 1 hour time frame bullish, 4 hour bullish. So we now have bullish and bullish, good and fine. Now, The first time frame that we have, which are the daily time frame and the weekly time frame, are our long-term bias. The 4-hour time frame and the 1-hour time frame are our short-term bias. Remember, weekly and daily, 4-hour and 1 hour, we initially said that they will be our bias time frame. And our bias is defined into two: short-term and the long-term. So now that we have our short-term bias, which is bullish and bullish, but the long-term bias is bearish, what do you think we will do? Oh, perfect. What we need to do is to ensure that we will buy. That's what we are looking for, because 4-hour and 1 hour agree to being bullish. Therefore, on this particular day that we want to trade, we will be taking a buy trade. And the buy trade that we want to take, we want to ensure that that particular buy trade is to the higher time frame supply. That is to the daily supply covered by the weekly supply. Supply simply means areas where we want to sell. If you are wondering that, oh, but how do you know how to mark a correct supply zone or a correct demand zone? Of course, I got you covered. Find below or around my page, on my page, if you are watching this on Instagram, or on TikTok, you will find supply and demand series part 1, part 2, and part 3 on them. And if you are watching this on YouTube, you will find the link of my supply and demand series. You'll find it in the description, that is in the caption below. All right. So without further ado, let's get into it. So now our short-term bias, because when we are talking about a model must be deductive and inductive. That means you want to trade lower time frame, align short-term bias to a long-term bias. Same way you align long-term bias to a short-term bias. So you are doing the inductive way and the deductive approach. All right. For a good model, that is how it should be. So what you want to do now is that once you see that 1 hour is bullish or 4 hour is bullish, or even if 4 hour is bullish and 1 hour is not bullish yet, you want to wait for 1 hour to be bullish. You want to wait for them to align. All right. Once they align, if 4 hour is bullish and 1 hour is now also bullish by virtue of break of structure, then on your weekly and on your daily, on your weekly and daily time frame, you want to mark a weekly time frame zone. And within that weekly time frame zone, you now want to mark a daily time frame zone. And which zone are we marking in this case? Because weekly is bearish and daily is also bearish. So you want to mark weekly supply zone. And also, you will now mark the daily supply zone within that particular week. Let's come back to weekly and daily. So let's say, for example, here, around this price, let's say this price point is, let's say this is 0 USD and this price point is 1.0719. And another price point, we have our supply area. So let's say somewhere around there is our supply within this area. So this is our supply on the weekly time frame, ranging from 1.0719 to maybe 1.0800. All right. So that is about 80 pips, 81 pips to be precise. So 81 pips range of supply is what we have. Now, remember that the weekly is around this high, which means this is still a lot of long distance. This short-term buy that you see, this short-term buy right here, this small buy that you see on the weekly time frame, okay, that you see on the weekly time frame, for our daily, I think I need to include that, we were explaining something. For our daily, let's say price is somewhere around there. Like price has done the without breaking this high. It must not break this high. Remember, it must still be bearish. So yes, so let's say on our daily, this is what we have. So this is there. This short-term buy on weekly and this short-term buy on daily, all right, it did not break any structure. It did not break this significant high on our daily. So this short-term buy on our daily is the one you are seeing on the weekly. And the weekly supply that you can see is still far above here, right? Inside this range, okay? And that supply, let's say, is what daily is showing it clearly. Now, within that supply, let's say this is the daily supply, this particular range here. this particular range, this is the daily supply. When you go within this range of price that you see on weekly as the supply zone, this particular range is the daily supply within, it must be within that weekly supply, all right? Now that you note that from on our weekly, we have this supply, daily, this is the supply, the daily supply within that weekly supply. Oh, that is perfect. And that is a long-term trade as well, not bad. So which means our trade, we are planning our trade on the 4-hour and on the 1 hour, we are planning that buy trade to that price range. That price range on the 4-hour, that's weekly supply area on the 4-hour might be somewhere this far, maybe around there. All right. So this might be that 1.0719. That is it. All right. Isn't that beautiful? Then we know that, yes, we are looking for buy and we are looking for buying all the way to that 1.0719. All right. That exactly means that we now have a bias. That exactly now means that we have a bias to buy even long term into the weekly supply. And we know that once we get to the weekly supply, we'll be looking for sales, definitely. So, but our plan now, 4-hour, 1-hour alignment to be bullish. Perfect. The next thing now to do is to go to our entry time frames, which is the 15 minutes and 5 minutes. On our entry time frame, we are not looking for bias. We are not using them to trade in this scenario based on the process of the time frames that we took. What we are looking for is to look for them aligning 15 minutes and 5 minutes, aligning to our bullish. We already have our bias, which is short-term bias, bullish bias, into where? Into 1.0719. That is exactly what we are looking for here on the 15 minutes and 5 minutes. So we are just looking for 15 minutes and 5 minutes to align for bullishness so that we can now what? We can now take our buy trade into the weekly supply, long-term buy trade into the weekly supply, while we take some profits along the way. Also, do note that when you want to take the buy trade, ensure that that buy trade is covered by the 4-hour demand zone. Very important. Just like our supply, we start picking our supply from the higher time frame, which is weekly. The higher time frame out of weekly and daily is weekly. All right. So we start by picking our higher time frame weekly supply zone to initiate that trade. All right. So, but for this particular trade now, since we are bullish on 4-hour, bullish on 1 hour, and we want to take a buy trade based on that. Therefore, you want to be careful enough to pick your demand zone on the 4-hour. That is your buying zone on the 4-hour. We already have our break of structure. So what do? We'll now find our buy zone. All right. We'll find our buy zone. So let's say our buy zone is around here on the 4-hour. Let's call it a price range of 1.0450 to 1.0400. That is the range, the demand and supply zone. The demand zone here is 1.0450 down to the distal line here is 1.0400. It is the 4 hours demand. That is where we want to take our trade. All right. So on the 1 hour time frame, that demand zone might be somewhere around there. Can now be somewhere around there. That's 1.0450 to 1.0400. That is that demand. So automatically this has taken out the factor of, oh, this being liquidity or not. That's why I told you that you don't need to worry anything about liquidity. Structure is the foundation of liquidity. You don't need to worry about it. If you do this properly, anything like liquidity would have removed itself out of the equation. Same way you saw the relationship between the weekly and the daily time frame. Automatically, this particular high on the daily time frame has factored itself out as liquidity because the supply zone within the weekly range, the daily supply zone within the weekly range is this. So this particular high, calling it liquidity, calling it inducement, has already factored itself out. It has already removed itself. Very simple and direct. And I believe you guys will love this. Now, let's go back to here. So, on the 4 hour, our demand zone is 1.0450, 1.0400 on the 4 hour. On the 1 hour, that is the range. You can now refine, just like we found daily supply within weekly supply. We can also now find, to refine this, it is very correct and very accurate to now find 1 hour demand zone. It could be a base rally, the base there. It could be a drop, maybe 4 hour is a drop, a base, and then rally. Then inside the 1 hour, within that range, the 1 hour that is clear, the zone that is clear on the 1 hour within that range could be a rally, the base from the rally, then before the next rally. So you can mark the 1 hour within, remember always within, that is, it must be in between 1.0400 to 1.0450, not outside the bigger time frame, which is 4 hour time frame demand that you mark. It must not be outside it. All right. So let's say when you mark the 1 hour demand within here, let's say 400 is range of 1.0430, all right, and lower. Now, I will advise you to always use the distal line of that 4 hour zone. That is the lowest price that you get on 4 hour zone. So with this, you have removed 20 pips and your stop loss must still be below 1.0400, which is the lowest point on the 4 hour zone. So instead of 50 pips, you have decreased your stop loss range to 30 pips. So now make it better. You can decide to enter from the 1 hour time frame if you are cool with 30 pips stop loss, and if you are cool with, 2 hour, 3 hour, before price gets to that zone, you will be able to get that. But in order to refine better or to wait for confirmation, that is why you now have the 2 other time frame pair. All right. That's why I told you that you could use 4 time frames. For example, weekly, daily, 4 hour, stop at 1 hour, and 1 hour, stop at 1 hour, enter at the 1 hour demand zone, and then you have your trade. All right. And then you have your trade. But however, if you are not, if you still want more, if you like to wait for confirmation and all, that's when you can have 6 time frames. That is, you need 2 more time frames as a pair, which will be your entry time frame. In this case, we are using the 15 minutes time frame and the 5 minutes time frame. All right. So let's go to that. So entry time frame. All right. So we'll have 15 minutes and the 5 minutes time frame. All right. So what do you want to do here? Very simple. What you want to do is just within that's your 1 hour / 4 hour demand. All right. So let's say that demand is this range right here. And let's now say this is 15 minutes now. And we have the demand right here. And price is somewhere around there on 15 minutes. And then price is like this. Okay. So what you want to do in this case is to ensure that we are not using this as a bias time frame, even though you can use it as well. That is, for scalpers, you might want to, since this is bearish at the moment, you might want to, quickly sell to the demand, but don't do that. Just follow the protocol, take high quality trades only, and be good. So see this only as entry time frames. All right. So here now, that's our refined time frame on the 1 hour / 4 hours. So this is that demand as seen on the 15 minutes time frame. So what you want to do is that you now want to wait for 15 minutes to get there. When 15 minutes get there, then you want to go to 5 minutes. 5 minutes will first break structure to the upside. 1 minute will first break structure to the upside, but here we are using 5 minutes as the least. 5 minutes will first break structure to the upside before 15 minutes. So on your 5 minutes, you might have, so this is that same demand. You might have something like this. This is that same demand on 5 minutes, okay? And 5 minutes also has been bearish, bearish, bearish into here. So in this case now, it is the lower time frame. In this case, it is the lower time frame that you want to align with the higher time frame. So let's say, for example, 15 minutes did something like this and did this. You will notice that 15 minutes here has not broken any structure. So let's say 15 minutes now did this, still formed a lower low inside that same demand. Okay, it still formed a lower low inside that same demand. So what you want to do now, let 15 minutes align to a bullish structure because you want to buy. So once 15 minutes breaks structure, breaks the last high that it formed, all right, what do you want to do immediately? Remember, on the higher time frame, that is where you want to what? You want to pick the demand. So if 15 minutes is saying that this is its demand on the higher time frame, so what do you want to do? You now come to the lower time frame. Automatically, the lower time frame too must have given you that bullish, must have broken the structure. So you now wait for the 15 minutes. This is the demand. So let's say this is that demand on 5 minutes. So you wait for price to tap it. And not just that, you now wait for the 5 minutes to break structure. Again, now you are not interested in the 15 minutes anymore. 15 minutes has already broken structure. 5 minutes has broken structure. But 5 minutes is still bearish. Presently, 5 minutes is trending downward. All right. So what you want to do is that you now want to wait for a break of structure. Once you see this break of structure, take your trade and buy. And where are you targeting? All the way to the weekly supply by taking some little profits gradually along the way. So what you want to do is buy to that target. I believe you love this video. Ensure that you share it, like I said. If you really want me to do live practical examples, I can even do a live trading session whereby I will only be using structural analysis. No other thing, no HRC. If you are new to any of my social media, HRC is a concept I find myself. No HRC, nothing. Purely structural analysis. I will do a live session to actually teach this. But if you want that, you must share this video. You must ensure that you bookmark, save it, watch it over and over again so that it can go far. Like the video for the algorithm to help you travel far. And of course, I will see you guys on the profitable side. Bye.